Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today, we're going to look at what my chart looks like for the S&P 500 E-mini futures contracts. Today is June 1st, Monday, 2020. Unfortunately, in the morning session, I missed it. Had some other things I had to take care of, so I started trading after about 12 p.m. Central Standard Time. But just wanted to show what my chart looks like and what I look for as the day goes on. I know a lot of the videos I do are kind of leading into next week and what I'm looking for, but just want to show on day to day as well, how I have my charts set up, how I draw them, and basically everything I look for. Because if you've ever day traded before, it can be real confusing as soon as you start entering and exiting live trades. You can review all the charts you want pre and post trading, but as soon as you get in live in there, you can confuse yourself very easily, see things that you normally wouldn't see, make silly decisions you normally wouldn't make from reviewing all your charts and everything. So that's why it's real important to just find a couple things that work for you and then build on them from there. Because what you're looking to do, or what I'm looking to do when I trade, is look at these charts like a map, and they're going a certain direction, and it's my job to figure out which way that direction is, therefore which way the trend is going for the market, because that's going to be for me, that's the biggest issue. If I can determine where at least the short-term trend is going, then I can get my trade steps on the right side of the trade. So even if my entry is bad, they still stand a good shot of working out because I'm going where the big money is going. So basically what we have over here, this yellow line, is the end of the previous day session and beginning a new one. Normally I really don't trade that. This is all going on after 5 p.m. all into the early morning sessions, and then the market opens up about right there, 8:30ish time. So let me back out here a little bit. What we have right here is for this previous days right here. So what these black lines are right here are the overnight high and overnight low sessions of the market. So you can see there's the low of the overnight, there's the high of the overnight, and then the market again opened up right about here, about 8:30. So I like to mark those. Those tend to be a good support and resistance area. Obviously not always they are, but they do provide a good barometer for where you can expect at least some initial either support or resistance when price comes down to them. And then these black outline boxes with the white inset form right there, alls that is, I take the overnight low and the overnight high, and that's the 1.272 to 1.44 Fibonacci extension level. And then you'll see down here, if you go the reverse way, it goes right there as well. So that is just another area when price breaks out either to the downside or to the upside, you can usually expect some type of at least pause in price, if not some form of resistance, or look for either some retracement or some support down here to get the move back the other way. Now, of course, if it's in a huge trend, whether it's down or up, sometimes they just get blown way past, but it again, it's just a good map marker I look for to see where there could be a support resistance area. And then right here, this blue outlined box with the white inset for it, alls that is the 50 to 61.8 Fibonacci retracement level using the overnight low and overnight high. A lot of the times I can see it worked here today, and at least initially when price comes down into it, it usually does stop the price, at least halts it initially, depending on which way it's going. If it's going down, it usually gives it some support. If its price is going up, it usually gives it some resistance. Now, as you see here today, price definitely bounced off of it when price opened and then trended up the rest of the day. So here, that's what I look for when the market is opening. So then going into Tuesday, June 6th, I'll move these lines to wherever the overnight high, overnight low is, and then draw all those Fibonacci extensions there as well, looking for it. So moving into and I'll talk about these green boxes here in a second. So moving into the session, we see we have from an open up Sunday night right there, there is a big there's a big gap, and then went down some, and then eventually came up there and filled it up as during the overnight section, filled that gap perfectly, as you can see. And so then when Price came back down. It was just waffling around right there, and then right before the market opened, 8:30 Central Time for the U.S. market right there, it looked like if you just go over to about right there to the market before it opened right there, is looking like it was either going to be a range day or a down day right there. Price was coming down. It's definitely in a downtrend going down into it, so it definitely sucked a lot of people in right here. As you can see, there's a lot of stuff going on right here, and then they just took off pretty much for the rest of the day right here. It's pretty much went straight up until the market closed right, or did not close, but the major trading session. That's pretty much everyone goes home, 3 p.m. time right there, and then it just trailed on off right there. So what these green boxes are right here is I usually start the day off depending on looking at the hourly chart. If I'm looking for long-term swings, where'd it go? Here we go. Looking for long-term swings. So definitely right now what we have right here, this is an hourly Fibonacci retracement level right here. Let me draw that down a little bit more, and there we go. So what we're looking for right here, we're definitely looking for an uptrend for this Fibonacci retracement level right here to come up somewhere between the 1.272 to 1.414, maybe a little bit higher depending on what the trading system target is. I haven't targeted it yet though, because I wait for this to come up and get hit right here. And so our bias is for a more intermediate term towards the upside right there. Then if we go to the ES here, either on the daily or the weekly chart as well, we are looking for more bias to the upside. In fact, we're looking for more upside until price sits somewhere between about 31.12, or at least to about 31.12 right there. So going into tomorrow for Tuesday, my bias is going to be towards the upside, towards the market, because here on the daily chart, according to this setup I have right here, we're looking for this target to come up here and get hit to 31.12. After that happens, we'll start looking for either some sideways action or maybe even some retracement. Now, it doesn't mean right exactly at 31.12 that is when it's going to happen, but this is a target zone area right here, and that's what these green boxes are right here. They're just target zone area I have for the 1.272 to 1.414 areas from these Fibonacci retracement moves up here. A lot of time when price does hit these up there, it does provide some sort of resistance when it's going up and support when it's going down. So when it does hit somewhere in this box, 31.12 to about 31.90 up here, I will be looking for the market to slow down some and not continue its trend where it has been since about the 14th of May of moving up for it. So going into back to the 2-minute chart right here. Oh, let me go back to that was the continuous contract. This is the June contract right here, and these would be rolling over here in another week or two. Let's see here. Okay, here right here. So going down here, we'll just start when the market opened right here about about 8:30. Now again, unfortunately, I wasn't able to trade for this right here. So what I'd be looking for right here is, as you can see, price using, believe it is that one and that one right there. Yeah, that swing high, that swing low, created that target area 1.272 to 1.414. You can see that was the major reversal point of the day. Plus you add in the overnight 50% to 61.8 Fibonacci retracement level, and that's creating a great long setup right there, because that's the crux of my trading. Of what I'm looking for right there is I'm looking for these price movements, these two-legged moves coming down once, up, second move down right here, 1.272 to 1.414. What I'm looking for those is for those to come somewhere in between the 38.2 and the 61.8% trade. As you can see right here, it would have been a good scalping trade right here, because if we're waiting for it to come back into the 38.2% trade down to the 61.8 somewhere, we can see price definitely hit off the 38.2, but instead of coming back up, which obviously it doesn't do all the time, and then you can see if you draw this extension, price came and hit that box perfectly, provided some support, at least enough for a scalp, because I mean if you got in about 30, 41.50, I mean that's before you really need to start thinking about getting out right there. You know, that's, what's that, 41 up to about 40, at least 43, 52 points right there. If you got in down here, it's a little bit more. But if you were, and sometimes it was what I am looking for, instead of just scalping it out, is looking to take it up to the target trade up here, which would have been about 30, 55, 75. Obviously, this one wouldn't have worked out. I mean, the market's just dirty and how efficient it is, and how the big money doesn't want you to get in to where they're moving right there. So it looked like that would have been the perfect entry for it. But then what do? They take it up a little bit, go down, push it back down, create a new low before the rest of the day. They just take it back up from the lows of about 30, 39.25 all the way up to about 30.58.75 because this second target right here doesn't even hit the 1.272 to 1.414, depending, no matter which way you put it on. If you start up right here and hit, there's that green box, start taking it down a little lower right there using that swing low and that swing high, it still doesn't even come down and hit it. It comes close, but not close enough if I was looking to get in right there, and then takes it all the way back up right there. So we have that start going up right there. So then what we have right here is we're in a more longer term or a larger kind of A, B, C, D move right there going up. So then what you can also start doing right there is you can also start looking for trades within that swing. So we have one right here. Price comes down, hits at 38, goes up here and hits that target. But again, the way I look for it is I look for a two-legged move. So when price is coming down to this area, I just don't take it blindly, because there's been plenty of times, like I'll just show one. It's not the perfect example for it, but something like this. This used to just destroy me in the past. These moves where it would just wipe you out. Like if I just had, let me show you the Fibonacci retracement right here. Just say this was like the swing I was looking for. I was looking for price to come bounce off somewhere between the 38 up to the 61. I would just have my contract sitting blindly up here, either at the 38, the 50%, 61.8, and look at that, price just blows through it and destroys your account right there. So that is why now what I look for it is some type of two-legged move. This one does have one. It's a little bit harder to see. Use that swing high and that swing low. There's the first target down here right there, but it doesn't go low enough, because again, I like having that target right there to get somewhere in the 38% to 61.8 box. So unfortunately that one right there wouldn't have got me in, but it comes up, makes a very nice trade for it, and starts creating some other trades that you can get in. Then if you take that one, because I think the next time you can get into it isn't until right up about right here. There's some other trades and things like that. So these circled ones were the ones I got in. Let me show you the reason why. This one is kind of just a naked entry trade right here. It's really not one I'm too excited about. Probably not one I'm going to do moving forward. It did work out this time, but I really just don't like it. So when you had from this setup, let me delete some of those green boxes here to make it a little bit easier to see. So when you had using opening swing low to that swing high, comes down, hit the 38% line, goes up, and there's the target box right there in between the 1.272 to 1.414. So you have that, plus it's hitting off of the overnight high. And okay, I'm sorry, actually I don't mind this trade now because it's hitting off the overnight high. I thought it was just more of a naked type of trade right there. So it's hitting off the overnight high as well. So what I did, I just drew a trend line on it. When it broke the trend line, got in short right there and took it back down to the bottom of where the overnight high is, because definitely seen it break out before, come back, use that support, and then bounce up again. Obviously this time it didn't, but I didn't know that moving forward, so got in, I think when it closed right there, 57 down to about 56. So just a little 1 point scalp, no big deal. And then this one right here I took as a short and got out somewhere right around here. One of the reasons why it was a second entry right here short, and in another video I just did, I showed one of the entries I do for my second entry shorts. You can see you have the swing low down here, goes up. This bar breaks lower than that bar. That's your first entry. Breaks back up, 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 up. There you have this bar right here. Let me delete that box. There you have this bar right here. Excuse me, this bar right here breaks lower than that bar. As soon as I did, I had a stop order waiting for it. Got filled right here, came out and got me out right there. So two reasons why I took it. It was coming off of, it was a second entry, which is good. It's somewhere in between the 38% up to the 61.8 box. Now, it wasn't a two-legged move that I was looking for. You can see it came up and got close but never hit it, which I really would like to see. But another reason why it was coming off of the the overnight high area as well, which was looking like it was going to use it as some type of resistance, and so that's why I took that trade, and it worked out pretty well. And then the one that got me right here, which unfortunately again this market is really dirty, is I was looking for using this swing high and that swing low right there. I was looking for the short somewhere in this area right here, so I believe I got short right here. And then because the reason why is using that swing high to that swing low, you can see that box right there. That's a target area for it. So I was looking for that short plus that, and looking for a little bit of this, the overnight high as another short area, and then I was going to take it down again, back down right here. But I had my stop just right above, just right up here. Came up and hit it, took it out, no big deal. Definitely a losing trade for it. But as you can see, price did continue to move up before it finally did come down and complete this trade all the way down there. So really, instead of it was more than just a two-legged move right here. So if you use that swing low to that swing high right there, price comes on up, and that really was a target area to look for to move down short. But again, that's a pretty hard one to do right there. It's a real deep retracement into it. It's at least into the, let's see here, it's probably going to be to the 78.6%. Yeah, right up to that 78% line, and actually a little bit deeper than that. So no big deal, just a real dirty setup that the market was doing right there. But my initial way I viewed it was correct, that eventually did come back down and take it out. Unfortunately, I obviously got in way too soon. Took me out of it, but my theory was correct. It was just a lot of a deeper trade, but anyways, it was wrong. So whether I was correct or not, I was still wrong, and I lost money on that trade, and the overall goal is to win money. So definitely reviewing that, soon I can do better to moving forward and try not to get caught up on that stuff. But then as price was, it was getting close to the end of the day right here. Price finally came back down, completed that setup there right there, and then just kind of waffled around some. So anyways, those are the trades I took today. That is the overall way that I'm viewing the market, the way I'm trading. Not much has changed in a long time from trading it. Still using the 50% Fibonacci retracement level area between the 38.2, 50%, 61.8, but then also now really incorporating the 1.272 to 1.414 extension levels from it. And then, of course, as I explained in other videos, as other target areas and other ways to enter the market using the trading system when that is applicable to it. So moving forward to tomorrow, what I'm looking for is, let me move these Fibonacci things out of the way right here. Let's say that's going to be the swing high. That's the swing low right there. And it may not be, you know, the overnight session here. I mean, we still got, shoot, what, 10 hours until it opens, something like that. So that probably won't be the swing low and swing high. So I have to adjust this in the morning, but no big deal. Then I'll draw my Fibonacci 50% back box. If price is moving up to it, then I draw it red. If price is for just to let it know that the bias is to the downside, and then like today when price is moving down into it, I drew it blue to let know that the bias is kind of to the upside since the price was coming back into it. And then of course we have the 1.272 to 1.41 boxes, and then let's draw it the other way here real quick. And move that box up here. So tomorrow I'm looking for in the market, as we're looking at the daily chart, I'm looking for more upside to the market, at least until it hits 31.12. Doesn't mean we're going to get there tomorrow or the next day, but definitely for the rest of this week. My bias will be more towards the upside, looking for it to go forward. And if this hour entry holds right here, let me fix that a little bit. If this hour entry 50% one holds as well, then this would also coincide with that daily chart we're looking at, because they're between this target box up here. That target box up here, the hive is just a little bit south of the 3112 level, but if it does fit up nicely for it. So that's what I'm looking for. I know this video is a little lengthy, but just want to show my thought process going into each day I trade. SP 500 is, and the Russell, those are the two main markets I trade, and I'm also trying to incorporate the Dow Jones into it. You can still see my drawings here from today on these markets as well, but I'm going to need to get another monitor to put the chart up, because trying to switch back in here and back and forth between all these gets kind of annoying. But anyways, have a good one. Take care. Talk to you later. Bye.